Is the top in for markets around the world? This is a question that all of us are asking right now. And in today's video, we take a look at the next 2 to 3 months and a big outlook of what's happening right now. We also discuss Chinese data. It came in double-digit drops in both imports and exports. This global destruction is now everywhere. And of course, at the same time, Moody's has downgraded regional banks. So should we be concerned? Well, remember we brought up this particular indicator a little while on the channel. And yes, it's turned from above 70 to back below. So as this happens, it often marks a temporary peak in markets. How bad could things get? Today we talk about the importance of watching the semiconductor markets. We talk about indices across the board and the key levels that we need to be watching over the next 24 to 48 hours. And of course, we discuss inflation. It's only just a little bit away. Let's go through it today. Well, welcome back everybody to the Daily Show where we discuss markets around the world, including stocks, commodities, and cryptos. We'll also be talking about macro leading indicators and the hottest charts. So if it's your first time here and you like anything to do with markets, make sure to join us, subscribe, smash that like button, and we've got a lot coming up in today's show. It was pretty much a mostly sell-off day across the board, though LLY did do very well with a 15+% gain. After earnings. But let's talk about leading economic indices and recession territory. You'll see everybody start talking about recessions again in the next coming weeks if we continue to sell off. Just remember, a recession will never come till generally we see an inversion uninvert, and that is pretty much a known fact across the markets. That means that we've got US 2-year generally going below the US 10-year again, and we'll be updating you on the channel should that occur. We're also looking at things like jobs numbers weakening in the US, which just hasn't happened. But still, this is certainly entering back into recession territory. So let's talk about this current drop in markets. Everyone's trying to buy the dip, which is fair enough because we've been basically rallying now for really about 4 or 5 months since March. And realistically, smart money hasn't really been necessarily buying in heavily. CTAs we know are already fully positioned. And generally in a run like this, we get what we call mean reversion, which is a return back to a 20 weekly moving average. Have we seen that this run? No, is the answer. And of course, dumb money has been purchasing, that's us by the way, has been purchasing pretty heavily. It may be time to shake us out. This is the right period. It's usually the weakest 2 to 3 months of the year, which we'll look at soon. And it's a point where we tend to see high volatility that we've been discussing on this channel. Remember, last time we saw a spread this wide, smart money was buying huge, and that was during October of 2022. From that point, well, we know what's happened. The markets have, of course, rallied back up. So with a discrepancy this big and a divergence this big, we need to be paying attention. This is another chart that you should just quickly look at. We talked about it in the previous video, and it's US M2 growth versus the overall trend. If this drops down, which we'll update you if it does happen, we'll need to be paying attention. So make sure to subscribe for that as well. So all eyes are now on inflation, with weakness coming in across the board from China and from some global economies. We now move over to what's going on with inflation. All of the shipping costs have increased recently into this month. And it also looks like diesel prices, well, we know, have been increasing. This generally leads into US CPI year on year increasing across the board. And this will be a very, very big inflation read. If it comes in hot, maybe the market will react very negatively to it. We don't know exactly that. And again, this is possibly a prediction, but the problem is how are we going to trade it? As we always say on this channel, we're better to have patience and react to the number and have the key levels that we believe basically is where the big banks are entering positions, the liquidity or the equilibrium in these markets. And we'll talk about some of those levels coming up in today's show. So the S&P 500 forward PE ratio, where's it at? Well, it turns out it's probably trading around 19.2 at the time of this recording, and that's still well above where you really want to be investing. Usually anything under 17, I like 15.5. These levels have been fantastic investment levels moving forward. And it's just like a bit of a broad scope. Remember, the market trades in the future, so generally forward PE is one of the better fundamental kind of bits of information that you can use. July 19th basically marks the peak of the current market with the peak FOMO readings from sentiment. I just wanted to show this again, just to show you that when everyone gets super FOMO, sometimes you need to be a little bit cautious. And at the moment, there's still a lot of bulls around in the market. So we have that buy the effing dip reflex right now. That's what everybody is thinking, yeah? And what this means is that until we see more bears start to appear, there is a possibility that this drop could continue. And again, we're looking for that weekly moving average. Now, what about the data? Should we be concerned if we're investments and we're an investor in these markets? Generally, no. I mean, basically, the hard data stating to the end of the year is super positive. In fact, it's usually August to around the middle of October during pre-election years that tend to be weak. And that's the period that you're looking for any type of weakness. We've discussed this many times. Volatility spikes during the months of August into September like clockwork. We usually get another spike around Feb to March. And so far this year, it's been doing that exact type of thing. So we need to follow that. Here are the last 10 pre-election years, just to give you an idea of what happens. Here's where we are right now. Here's where we could be going. And in general, we'll bottom somewhere at the late August period if it's going to happen. Now, that's not, of course, a guarantee. It's just something that's happened in the past. And of course, we're overlaying that with the current market and the current conditions. What else have we been seeing? Let's go through some of the biggest trades that have happened over the last 24 hours and why and what they might be telling us. A large trade here on United States oil funds could show us that people are taking profit into basically the CPI number. Do we know that that's a sell yet? No, we don't, but we can assume that there's some risk aversion coming into this number and they've chosen to take some profit. So USO certainly printing a couple of large trades there, including a dark pool trade we alerted you to the other day. What about IWM? Well, you'll notice there was a large trade up here and there was a large trade that began the last rally. At the moment, it's sold and broke through a key level. So while we do expect a rally, there could be sellers or bears sitting at some key zones that we'll look at later on. And then we have DKNG, which is DraftKings, a random dark pool trade after hours sitting at these highs. It certainly could be a buyer, but most likely I think there's someone taking a little bit of profit there, banking some of those points. And this is what gets interesting during earnings season. You know, we've got quite a few big updates still coming. We've got Baba, which is on Thursday before open. That'll be an interesting one considering the data out of China. And of course, Walt Disney, that's coming out after the close on Wednesday. There are many others there. Make sure to have your earnings calendars ready, and we always update you here on the channel as well. Let's now run over to the wonderful world of options. Do we have any unusual trades that have happened in the last 24 hours? Well, I think the most unusual one was probably something to do with Palantir, I would say. Palantir coming off that earnings announcement, 2.57 times the 90-day volume. However, it dropped 5.3%. Now, Palantir on the surface looks pretty good. I mean, you look at some of their data and you say, well, this looks like a company that's improving. But we do need to remember that it ran up pretty heavily into that announcement. Now, I'm not going to go into the fundamentals of it, but it did hit a little bit of support over the last 24 hours. And of course, that's something that we will be looking at. Snowflake also came in with a 1.21 and dropped 6.2%. Again, some disappointment here from the earnings outside of some of the largest tech stocks. But Apple continues to be one that gets overtraded. And if we go down here, you'll notice that we're still seeing that reflex of buying the dip. 54% of open positions were calls, 46% puts, and still lower than average volume. So it allows this market to potentially go down when we have lower than average options trades. What about rotation? Well, we can see here that we did start to see a little bit of bullishness out of some markets over the last 5 days of trade. Healthcare has been the best, one of the defensives. Staples in the middle, utilities been pretty shocking, and things like solar and clean energy are getting slaughtered in this sell-off so far. We've also seen semiconductors and technology give up a lot of their gains over the last month, and they've kind of fallen off pretty big. Over the last 24 hours, healthcare, utilities, and staples were in some of the tops, but we continue to see this inflation trade. Things like energy doing well, things like metals doing well. This is the trade that's been happening now under the hood for about a month, and it's really pushing into a very important point. And of course, the inflation figures are going to make a big difference to this trade. Let's jump into the charts and take a look at the levels we need to set. As I've always said, set an alert below, set an alert above for the US 2-year. That will be important. If we go into the unknown, that is above 5.1%, expect markets to freak out. I would say they will not like that. And of course, that will make big moves in certain markets, specifically things like energy, gold, those types of markets will move quite heavily. JP10Y fell off, so we're just setting alerts 0.7, 0.8, 0.9, and 1. And we're doing that just in case you forget about it in the future, because of course the Bank of Japan changed a long-standing policy last week or 2 weeks ago, and that may eventually become a shock in these markets. From the equal-weighted market, it held pretty well. It actually dropped off and then it fell and it came back up. And markets looked like they recovered a little bit or somewhat into the end of the session. So that's just something that, of course, we will be paying attention to, and whether this is actually as low as we go, just a 3% sell-off in the S&P. Treasuries gained. Some people will call this an island reversal down below. We do know there are 3 monster trades here, and we don't know whether they are profit-taking from sells or whether they're new entries towards the buy. I'm not won over. This is certainly one of my levels. Of course, 94 was one of my levels. Across 98, we had the 75, we had the 94, and then of course we've got the 88, 90. I'm still holding off on judgment on treasuries until we see inflation. It's okay not to pick the bottom, but you've got to understand when it does do a change of trend if you have a replicatable system. So treasuries, did okay over the last 24 hours. High yield junk bond. Now this is interesting. Usually this would be falling with the market. It's not. So we've got to question a lot of things here, especially after inflation. Watch high yield junk bonds, have them on your charts, and we might get some evidence from that later on, potentially. Let's move over to consumer discretionary versus staples. Almost no move. Again, not showing us a move towards defensives yet in the market. Magma, no new fall or drop off, so that's important. And we'll take a look at semiconductors as we mentioned this, because I think semis are probably going to show us the biggest failing in the market should they be able to close underneath this low. And they tried and failed to do so. So will we see a recovery? Well, of course, what the semis do, if we put in a double top, they could fall substantially. 144 or even go to fill like a 132 gap or 120.30 gap, this down here. These will be substantial moves. So watch the double top. I think semis are one of the most important markets to be checking out here in the S&P at this stage. Let's go over to copper. It made some recovery, came off this low again, mark out 368. If we get underneath that, we're moving towards probably around 356, and that will mean demand destruction is there. It kind of rallied and held, and a lot of this is just positioning ahead of the big news of inflation. What about central bank liquidity? Well, that's remained stable, and of course, the markets are starting to move down. And some gaps were filled. The Qs filled this gap here, so that's one gone. There's still a big one up here at around 380 to 382. So it is always possible that something like this could happen. And that would absolutely confuse so many people out there if that was what occurs. US oil, big hammer back up and still in the supply. No turn. We didn't go underneath 78.58. We're still in supply, and I would say I would not touch it unless I was positioning with risk management ahead of inflation. This one will get wild. Remember, if we close a weekly above 83.50, we're probably going to potentially $90 to even $92 a barrel. That's going to hurt a lot of people and really put the pain on the economy. So we need to be watching that one closely. US dollar, what happened there? Went back to the high, sold off. Probably a bit confusing now. It's failed to really sell this level while stops held above it. I think that this is kind of those zones where it didn't do exactly what you want. So you usually want to bail on a position like this, go on to a fresh one and say, okay, next up. And that's the good thing about the markets. If you do have a position, we'll look at Bitcoin later, which actually ended up going positive. If you have a position that's not done what you thought it should in the time that it should, you need to have cut rules. So dollar index, of course, we thought we'd sell in here. The market's coming back down, probably allow you out. But yeah, overall, not sure on what this is going to do next yet. It is a critical level up here. I do know that's where sellers should be. Could it be a double top with a low under here? If that happens, there'll be another entry point, I'm sure. Let's move over to gold. Now, gold weakened past this point. So this is exactly where we thought buyers would recommence. They did initially, and then it just sold, went underneath. And I don't actually want to talk about spot so much because it's still in kind of that buy zone. But I want to talk about GDX. Because if you actually notice, GDX took the low and then instantly found buyers. I've marked out a level, and I'm just going to put this on the chart here, 29.79. I'm actually kind of excited for GDX and Barrick and a few of these gold stocks. I'm just looking for them to show us momentum. And at this stage, yeah, we're looking at it on the charts, we're watching, we're patient. I do think that could have been a stop loss hunt. And yeah, instrument selection is key. So certainly a level here that we'll be focused on after the inflation numbers. I like to trade after we know rather than really predict too much here. Even if we do have zones in there, we would have had risk management procedure for the inflation. Let's move over to Tesla, not quite underneath 240 or even hit it yet. So of course, 240 was our target for the sell that came through. We know a lot of trades have happened here. Really, again, not super good trading on Tesla recently. If you sold it down to these lows, congrats. If it does fall through 240, then we could be moving all the way back down to like a 200 or a 210. So that could create a lot of volatility in this market. A lot of people are pointing towards this being like some kind of double, like head and shoulders style trade. We don't know it's activated that. So at this stage, it's still bullish from that 240 plus level. Let's move over to Apple, and it went through the daily 20 and then fell straight into the weekly 20. So this one's definitely front loaded the rest of the market. If the market does close underneath the weekly 20, that's going to be a pretty big deal. So we'll be paying attention to that should it happen, because that could push the other side of the Bollinger and even push back down to 160 for AAPL. And I'm sure a lot of you will be kind of very excited if the market gets down there. Maybe you'll be placing your long-term buys. I'm not too sure. But yeah, right on that weekly. And it wasn't the day that Apple fell. It was the day that other stocks fell. Things like Amazon fell off 1.6% off that high. We also saw Nvidia fall 1.66%. And things like Meta as well fell. Now, Meta's in particular is the interesting one, because if we go down to a daily or a 2 hour, we'll use daily here just to illustrate it. You'll notice that we have the potential of a first turn point in a while. That is an island reversal, a gap up, no gap down, held perfectly. So if the market did come in, maybe not today, but the next day when we get inflation and it sold off, yeah, Meta could be activating a decent short there. Again, risk management procedure. It's a technical analysis technique. It'd be going underneath the 20 moving average, and you'd be arguably going for something like 290 because it's the bottom of the Bollinger and also that previous demand level. Let's go over to TAN. So Sol has been in focus. It's almost at that level. First green session in terms of actually finding buyers near the end of the day. No turn yet. We'll be watching it more closely. We know there's a large trade there. We just don't know what it's doing yet. CQQQ, regardless of the news coming out of China, I don't think it makes any difference. And to be honest, most people probably expect this already. This is a question of government stimulus. And we all know the most powerful buyer of last resort, and it's always going to be the Fed, the US government, central banks in whatever country you're in, and of course, government policy in general. So at this stage, it's still in that kind of nice, humble kind of buy-ish zone, though you've got to be very careful there, of course. There are lots of risks. Barber might show us more, which is Thursday morning before the open. Let's talk about XJO for the Australian viewers out there as we enter into indices across the world. The ASX 200 is so boring. I think this is a terrible market right now. We do have a double top potentially, but we're waiting for the US. Very little trade here due to a mixture of good inflation stocks and, of course, some weakness as well. They're kind of neutralizing each other. We did see a bit of selling in the European banks, and that led to the German market continuing to fail. We've talked about this a lot. We do think that rallies still be met by sell demand at this stage, and it does still look like some type of distribution. So we need to be paying close attention to that one as much as we can. But let's move to the US markets and start off here with the Russell 2000. I really like this little green box area as a potential rally zone for the markets over the next 24 hours. And that could be where sellers recommit. We already know there's a lot of trade there. It's led into a sell. It funnily did not get underneath 1920, which is very interesting. Certainly a little bit of buyers there. And this will be the next fight, I think, for the bears. There are also some other key zones a little bit higher that will need to be watched, but we'll check that out when it happens. Qs, one gap filled. That's cool. We still have many gaps on the way down. So yeah, it rallied into the end of the day. It closed pretty much on the previous levels, as you can see here. So hard to determine that the market wants to go down further just yet. Let's move over now to the US. Actually, we'll go to the NASDAQ. So we'll load the NASDAQ up on futures. again, take a look at that. Look at those closures. They're not able to get below. So when we load up something like a 2 hour, you'll notice that they rallied off those low points. They've come back into this structure. And for bulls, you just really want it to get above this kind of level up here. If that happens, there could be a lot more strength here, 15,520-ish. Get above that, potentially move all the way back up to 15.7. That would be pretty big. Then you would have drops being met by bull demand. And at this stage, I would say that the sellers commit somewhere in here. So again, maybe it's going to be a lackluster next 24 hours into the inflation, but overall, that did fall through. Now we find out whether the market wants to do another buy the dip or whether it means business and it's going to continue to sell to get those weekly 20 moving averages that are still quite a lot lower. We've already talked about these key levels before, so we'll bring that for another video. For the S&P 500, it hit the bottom of the daily Bollinger. It bounced back up. It's the same thing we've been talking about for multiple days now. So basically, we filled the gap. Cool, that one's filled. Now we move down to this next one, which we haven't filled, which is 4440. I think 4400 seems like a likely zone the market will end up gravitating towards, but it might be, up and down and all around before that occurs. US 500, you can see here, is making some nice gains after hours and trying to get back up. But as we've already talked about, this is where the supply is. If we keep making a series of lower highs, then really all that's doing is profit takers are continuing to profit take. And if we make a new low past this point, I'd have to think 4,400 is a distinct possibility for these markets. So S&P 500 certainly in focus. And then we move over to Bitcoin. So of course we did have our little bull kind of trade that we thought would happen at around 29,259. I did mention in the last 24 hours, or last 48 hours really, that it wasn't doing what I had hoped it to do. Then we get that little bullish hammer that came off here. As it blew through, it kept going. The problem is, where was our target? So really, if you're going to enter a position like this, you really want to, you probably want to target these highs. So I guess you could say, it kind of hit it. If you held the position, congrats. We haven't seen a proper turn on Bitcoin towards the upside yet. I'm needing a 30.45, I would say. And if we get that, then it could be a big deal. And that might actually show that Bitcoin's ready to go. But I'm not discounting Bitcoin bulls over the next 6 to 12 months into what we always know is going to be the halving cycle. I'd love to get better price. I'd love for it to come down most traded zone or even lower. And I think, the markets will dictate that, being the NASDAQ, the S&P, inflation figures, all these things will come into it overall. Speaking of inflation, we do know that we now have the big numbers coming out here for CPI. Core CPI is expected to be 0.2. Year-on-year CPI is expected to be up 3.3. So we'll be watching this very closely, whether sticky inflation's there as well. We probably know that year-on-year is going to increase. How much, though, will be interesting based on oil. Thursday, 8:30 New York time. Then we get PPI, 8:30 a.m. Friday, New York time. Make sure to watch both of those and be on top of it. If you enjoyed today's video, you found some value into it, make sure to subscribe. Smash that like button, guys. That helps us so much, and I do appreciate it. And do remember, if you're interested in finding out about our Vegas conference coming up at the back end of September, you can check out the early bird tickets. They're over on www.fxevolution.com. And of course, they're available there. We've got some great speakers confirmed. I'll be doing some chats that we've never even talked about before on anything to do with our channels or even courses. And I think there's a lot of value there for you. So I'd love to meet a lot of you in the community, and hopefully you come along. Bye for now.